Hi, how are you guys? Today I want to talk about gold and Bitcoin and how this can help in these inflationary conditions. So let's see what the media has to say about it. Well, Yahoo Finance has an article that says that gold rises to another record as traders take comfort in US PPI. Another one is that Costco makes hundreds of millions on 24-karat gold bar sales. That was in Good Morning America.
With inflation stubbornly high, some people are looking to gold as an investment. And one place they're buying it, Costco. Trevor Alt is here with more on that. Good morning, Trevor.
Good morning, Robin. It's a fun little addition to the shoppers list for people who are going to Costco. You have your produce, your snacks, your paper towels, and how about a 1-ounce bar of solid gold? It feels like it's a novelty, but people are buying these up to the tune of hundreds of millions of dollars.
So tell us about the treasure.
If we don't go after that treasure, it's going to last the rest of our lives, and you know it.
This morning, consumers across the country are grabbing hold of gold. Amid inflation and economic uncertainty, the precious metal is tempting more and more shoppers.
This is a currency that has been around for thousands of years. It is one thing that holds its value and increases its value over a duration of time.
The phenomenon is playing out in giant numbers at Costco. A report from Wells Fargo says since last August, when the retail giant started selling these 1-ounce gold bars at a slight markup, they're now generating up to $200 million a month in sales. Humphrey Yang is a personal finance content creator, and he now owns one of those Costco bars.
I think this gold bar will hold its value, so I don't really think I spent $23.59. I more just converted one currency to another.
His TikTok video documenting the process has been seen about 3 million times since Monday.
I think I'll just hold on to it as long as I can, and maybe I can pass it down to a future generation.
Craig Beauregard and Julia Edwards decided to buy a bar on a whim while shopping for groceries.
We did a lap around the store and we just couldn't get it off our mind, so we went back.
They say they see it as a good investment, especially with a wedding to plan.
It feels good to know that I can hold it, I can bring it home, and I know where it is.
The price of gold has risen substantially over the years. Its current price is $2,348 per troy ounce. That's the way gold is measured. That's up $359 from this time last year, and almost 10 times what it was worth back in 2000. But it's not a guaranteed investment. The price topped $1,800 in 2011, but then plummeted below $1,100 in 2015, eventually climbing its way back up to today's record highs.
The idea of it is that gold holds its worth, and that is why people want to have that as a potential investment in their portfolios.
Now, keep in mind, Costco does limit your gold purchases to just 5 ounces per customer, so you should not show up to the store with your life savings in a bag of cash, hoping to get all those gold bars.
All right, so let's say you do buy it.
Yes.
What should you know about selling it?
Right, okay, I can see the dollar signs in your eyes. Step one is don't sell it to the first place that you find, right? There's a lot of people that will buy gold. You get a lot of different rates, a lot of different fees, so make sure that you're shopping around to make sure you get the best deal. You also should know that if this is a short-term investment, you have the possibility of short-term capital gains tax. That's 10% all the way up to 37%, so it's not pure profit if you do flip it. And also, we cannot stress this enough, it's not a certainty that the price is going to keep climbing higher and higher. Like any kind of investment, if you were to put this money in the stock market, it also might go down. So you got to keep that in mind if you're going to buy gold too.
But that's the thing, because gold holds the value because you cannot just print gold like dollars. You can print dollars. Bitcoin also, you cannot produce Bitcoin. That's the essence of why Bitcoin supposedly holds the value like gold in a way, but you have these potential rallies of Bitcoins. In gold tend to be more stable because it's always been there. You cannot produce more, so, and the demand is always very similar, so it keeps steady the price. Now with this inflation environment, of course it can change, and it's going to depend on the next earnings to see what gold is going to do. But let's see, and if Costco is selling it, well, that's an interesting fact, right? So let's see what another media outlet has to say. It says gold resumes rally to record highs after a softer US inflation readings. But that's interesting to consider because definitely inflation is going to play a role.
So it's been off to the races since then. We've seen very strong. Gold is, relative to its 50 and 200-day moving averages, is in the 97th percentile above. This, when you look at this in the top 5 percentile, so 95th percentile, it's a word of caution.
It's
Momentum in gold
21 hours.
doesn't usually have legs. And 1 month, 3 months, 6 months later, gold was down on average following those similar periods where we had this move. Even a year later, it was only up 20 basis points. And this goes back to 1980.
So this really does shift the risk reward a lot. I mean, if everyone's pouring in and it's making these big moves like this, maybe you could be a little bit patient.
Like they say, if you're selling it at Costco, I mean, maybe it's a little bit.
Is that a red flag?
I mean, yeah, but who's buying Costco? Not the central. Who's buying gold? Not the central banks, but Costco vendors.
Yeah. I gotta ask.
Well, and that's the other thing. If Costco is selling gold, well, let's see how much we're stretching, right? Gold for investment, as investment. Also, something interesting that he said is that gold rallies, they tend, in general, they don't have legs, which means that after a rally, you don't have this rally that keeps going like another stocks. So they tend to be pullbacks and they don't last that long. So let's see what is going to happen with this rally particularly. My what I'm thinking is that it's going to depend again in the next earnings. So we got to keep an eye for the next earnings season. And now let's see what CNBC has to say about gold.
No question. I mean, gold is a very good alternative to both of those for Chinese investors. The other thing, China had been running into some economic problems that started in real estate and then spread into the financial sector. I think that there's now some stimulus activity going on in China, and that helps.
Yeah, and then we have central banks.
Yep.
Now, this is a very intriguing story. They're increasing their supply of gold out there. Explain why that's happening.
Yeah, look, for central banks in primarily the emerging markets realized over the last 15 years that they are very heavily overweight in their official reserves in US dollar denominated debt instruments and underweight in gold. They have more than 2/3 of their reserves in treasuries and less than 5% of their reserves in gold. That's a dangerous imbalance as far as they're concerned, and they're doing something about it. They have been for 14 straight years now. This year has already started well with China in particular, a big buyer already. And I think that we're probably going to be another good year for central bank demand. That has been very, very good support whenever gold's shown any softness, and I think it's going to help to push prices higher.
And gold has a certain advantage. If you have it in a vault in your country, you can't confiscate it. I mean, this whole thing about what happened with the seizing Russian assets can't be lost on some other countries in the world.
Exactly. I think, it really increases the attractiveness of the one official reserve asset that is universally acceptable and entirely transparent.
Todd, we always talked about gold as a hedge against inflation. George and I have been talking about this for 20 years, but the academic literature seems very mixed on this, frankly. Some people think it is a hedge against inflation. Other people think it historically doesn't appear to act that way. And is there any thoughts on what people are saying now about gold?
Well, people are using gold ETFs to diversify away from stocks and bonds. And so we've seen a rally in gold. We've seen bid up demand for gold ETFs like GLD and GLDM in just the past month. But that's only limited the net outflows that we saw the first couple of months of the year. People have looked to other ETFs as either a hedge or to diversify their portfolio. Like now that we have spot Bitcoin ETFs, those have seen tremendous demand out of the gate, even at the same time that gold has started the rally.
Yeah, as a diversification strategy, it certainly makes sense. And people.
So yes, and so key points about this is about China, and in general countries that they have like a very unstable economy nowadays. So gold and Bitcoin, and you know that there's some countries that they accept the Bitcoin just because the transactions are easier when they have problems with their local currency. Another thing that was interesting is about the diversification, because with the ETF of gold, then you can purchase, right? Indirectly, you can have some investments on gold, but also in Bitcoin. Now that you have more ETFs getting produced, you can have more exposure to Bitcoin indirectly or directly if you prefer. So that's very interesting key point about this one. So let's read the next one to see what they have to say. This one is the last one. Is about Yahoo Finance, and it's very interesting the key points that he has.
presentation. So thanks for having me. Look, we've seen tremendous gold buying on the back of central banks, and more recently there's been retail gold buying in China. But I think we have to distinguish the kind of temporary cyclical rate factors driving gold here from what's more structural. And in the case of gold, I think there's a real big structural trend towards more gold purchases driven by the major geopolitical fracture that we have in the world today between US and Europe on the one side and Russia, China on the other. It's really been central banks, not trusting central banks, that has been behind the buy-the-dip mentality in the gold market. Now, having said that, people have gotten maybe a little bit too excited, and the expectation of interest rate cuts was maybe adding more longs to the gold trade, which of course are retracing today with the inflation print. That's the story. Inflation print's hotter than expected, makes the Fed less likely to cut in June. Why own gold at this stage? There's better alternatives yielding higher returns. And that's I think the battle, if you like, that we are seeing every day.
What is the pathway for gold then if we don't see the Fed cutting rates until late this year, maybe even Q4, or at some point early next year, the bulk of those cuts coming?
Well, for starters, Bank of America, we have 3 rate cuts penciled in. So we're still calling for a rate cut in June and 2 more in the second half of the year. So based on that, we think gold prices continue to go higher. But there's definitely a challenge for the gold market if the Fed doesn't cut rates this year, or as some people have claimed, if the Fed hikes rates, I think it will be pretty bad for the gold market and particularly for gold positioning. We've also seen a reflection of some of that in the currency markets, with euro-dollar suddenly softening up towards 109 and quickly reversing that all the way to 107.50, 107.60 as soon as the inflation print has come out. It's not just gold, it's also the fact that higher inflation in the US leads to persistently higher interest rates, persistently higher, stronger dollar, and therefore makes assets like gold less valuable. So there's a risk on that gold trade, and the risk, of course, as you pointed out, is the Fed doesn't cut or potentially hikes.
And then what would that mean then for prices, just in terms of the pressure that we could see? How much pressure could we potentially see?
Well, I think if the Fed starts to hikes again, you could see potentially quite a little downside pressure. Although I would expect central banks to come in and eventually put a floor on the market. Central banks are not going to be chasing the gold market higher. They're going to be buying on dips. And remember, here we are looking at the cyclical elements, which are connected to the rates and FX cycle, versus the structural elements, which are a lot more driven, in our view, by the fact that Russian central bank assets were frozen after the Ukraine war started, and the fact that we've had some major monetary and fiscal policy mistakes for the last 3-4 years, which led to this inflation wave, and they have left us, frankly, with very, very wide budgetary deficits that the buyers of those European government bonds and U.S. treasuries are a little worried about. Let's put it mildly. That's the other big issue here at heart.
And then going forward from here, what other commodities then do you like outside of gold?
So we think oil coming into the summer is going to do well. We think oil into the summer months will kind of top out around $95+ a barrel. We think gasoline and diesel are going to go along that. So we'll see a firm run-up in fuel prices. OPEC has a strong grip on the market. It's going to be another a bumper travel season, just like we had the last 2 or 3 seasons post-COVID. People want to travel, want to spend money. And also, the other commodity we really like at this stage is copper. We think the copper supply crisis is here, and we also think that copper is going to rip to around $12,000 per ton into next year. Now, the copper story is not only cyclical, with kind of lower rates potentially supporting the market higher, and a restocking cycle, right, which is really the short-term story. There's also a structural element to copper, which is the energy transition, is the need to upgrade the U.S. grid, the European grid, the global grids need to be upgraded to make them friendlier to renewables. and to the electrification of everything, and to the big wave of electric vehicle sales that started a few years back and will continue over the course of the next 5 years.
So yes, interesting facts about this part particularly is that yes, when you have the bonds that are giving you a 5% just by just putting your money there and not doing anything, then why would you have to take the risk of putting the money on a stock or just start looking at the trend of some ETF when you just have the bond, they give you the money and that's it. So while we have these high interest rates, it's easy money. So instead of putting it in gold, I would put it in the bonds and you get that 5% or plus back without any problem. You don't even have to study the market or anything to do that. So something interesting about the Bitcoin and gold is that they're gonna go up in theory with all this demand coming up, because the supply doesn't change, but also it's gonna depend on the inflation. So now that we have the report for inflation, let's see what's gonna happen with the earnings. That's gonna be interesting to see where the money is gonna stay. Something about copper is that he said that EV cars, they're gonna have this demand for copper, but it's interesting that this year we have elections, and depending on if Democrats or Republicans, whoever wins, there's gonna be difference in the policy towards giving funds for EV production. So that's something also that is gonna affect the production, the incentives for the production of EV cars. So keep that in mind, and I think that's all for now. So we'll see you guys in the next one. Have a good one.